Let's take a look at one of the trending tickers on YahooFinance.com. Uber is shrinking down its workforce following Lyft's layoffs last week as they both prepare for a new reality that involves a lot less riders. Yahoo Finance's tech editor Dan Howley is here with the details. Bad news for both these companies. It's not just Uber, Dan.
Yeah, Uber and Lyft, obviously ridership has been hit especially hard as a result of the coronavirus pandemic. But, if you looked at Lyft's Q1, they fared relatively well. Ridership actually grew, as did revenue per rider, though that was only up a small amount. They beat analysts' expectations, though that also is kind of all over the place right now, so it's not really a good indicator. They did see a 20% plus jump year over year in revenue. They did also narrow losses year over year. That's not really saying much considering how much they were losing previously, but it's still a good indicator. Now, what they are going to have to do is contend with Q2, and this is something that Uber is also going to have to deal with. Q2 is when we'll see the full effects of the virus hitting those companies. It only really started to impact them in March, probably the midpoint to tail end of March, when the lockdowns really started. And that's when the companies were hit pretty hard. But in the first couple of months of Q1, they were fine. So Q2 is really going to be the test going forward.
Dan, are these ride-sharing companies talking about how they're going to get back to business in this post-pandemic world? I mean, I know now they're not even doing ride sharing. It's just individual rides, right? Like solo rides. But what does this do to the essence of their business model going forward? And are they sharing their thoughts on that?
I think really what they're trying to do, like if you look at Uber, they're trying to ensure that drivers wear masks as well as passengers. Drivers, they're trying to develop some kind of method to identify that they're actually wearing a mask before they start to drive around passengers. Passengers, I'm not sure how they would try to ensure that they wear a mask. Maybe it's up to the driver's discretion, but that's something that they're going to have to try to figure out. And I think that's their first step. I think as far as, the long-term aspects of this, you have to look at how other industries are going to handle it. Movie theaters, restaurants, you're in a confined space with someone that you obviously don't know usually, unless you're very good friends with your regular Uber driver. But they're going to have to contend with that. And I think it's going to be a question going forward as to when people actually feel comfortable with this.
Dan, do these companies have enough cash to survive a downturn like this?
Yeah, I mean, that's why we're seeing them take these drastic cuts. Lyft, by the way, cut 17% of its workforce, some 900 people, then furloughed another 200. Uber also made considerable workforce. Executives are deferring pay or at least getting some kind of pay cut. They're cutting back on some other forms of compensation. So it's a real issue for them. And I think that they are well positioned. Dara Khosrowshahi, the CEO of Uber, said that they'll be able to get through this. And I think if you look at something like Lyft, they're really the idea for a pure play ride sharing service because that's all they've got. Uber has Uber Eats, and they can rely on that, though it hasn't been the golden child that it was originally expected to be. Though I think it's a way that they can boost themselves during this time.
All right, Dan Howley, thanks so much.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.